Every 3 months, the world's biggest companies have to show their work. They release this dense document that pretty much lays out all their wins and losses. It's called the 10Q, and yeah, it can look a little intimidating. But today, we're going to pull back that curtain and show you exactly how to read it like a pro.
I mean, that's the billion-dollar question, right? You see the flashy headlines, you see the stock prices going up, but what's really going on? How do you, yourself, look under the hood and actually check the engine? Well, the answer is right in this document. Think of it like this. Every public company gets a report card every quarter, and it's called the Form 10Q. It's their chance to show us what they've been up to, and it's our chance to grade them on it. And honestly, the best way to learn this stuff is just to dive in and do it. So that's what we're going to do. We're going to walk through a real 10Q from a company called Welltower, Inc. They're a huge player in healthcare properties. Think senior housing, medical centers, that kind of thing. So here's our game plan. First, we'll talk about what this report card actually is. Then we'll get into the numbers, the financial snapshot. After that, we get to hear the story from management's point of view, check the company's vital signs using some cool metrics, and finally, we'll learn where to find the all-important fine print. By the end, you'll have a solid toolkit for this. All right, section 1. Before we get lost in the spreadsheets, let's just start with the absolute basics. What is this thing, and why should you even care? Okay, so the Form 10Q is a required filing. It goes to the SEC, which is the big financial regulator in the US. And this is key. This is not some glossy marketing brochure. It's a legal document. The company is basically swearing under oath that this is the real story of its financial health. That's why it matters. Okay, let's get to the main event, the numbers. The entire 10Q is really built around 3 core financial statements. Get these, and you've got the whole picture. First up is the balance sheet. The easiest way to think about it is like a photograph. It just captures one single moment in time. On one side, you have everything the company owns, that's its assets. On the other, everything it owes, its liabilities. It's that simple. And to give you a sense of scale, just look at Welltower's balance sheet. It is absolutely staggering. We're talking about total assets of $59.5 billion. That's the value of all their buildings, their cash, their investments, all tallied up on one single day. It really gives you a feel for the size of this operation. Okay, next up, the income statement. So if the balance sheet was a photo, the income statement is more like a video. It tells you the story over a period of time, like the last 3 months. It shows all the money that came in the door, that's your revenue, and all the money that went out, those are your expenses. And what's left over at the bottom, that's the profit. And here's that video in action. Look at this. In the first 9 months of the year, Welltower's revenue jumped from $5.7 billion to $7.7 billion just 1 year later. That is a massive leap, and it's a super clear sign that the business is really growing. And finally, there's the statement of cash flows. Now, this one is super important because, get this, making a profit isn't the same thing as having cash in the bank. This statement is the one that follows the actual money. It shows you exactly where the cash came from and where it went, and it breaks it all down for you. Cash from running the business, cash from big investments, and cash from financing things like taking out loans. So we've gone through the hard numbers, but numbers don't tell the whole story, right? Now we get to the part where the company's executives get to explain what those numbers actually mean. In their own words, this is their side of the story. This section is called the Management's Discussion and Analysis, or just MD&A. And here's a quote straight from Welltower's. See how they put it? They're not just saying we own buildings. They're telling a story about their strategy, about creating vibrant communities at the intersection of housing, healthcare, and hospitality. This is the context, the why behind all those numbers we just looked at. Okay, so now we have the numbers and we have the story. This is where we get to do a little bit of our own detective work. It's time to check the company's vital signs. And we do that using something called Key Performance Indicators, or KPIs. Really, they're just simple ratios that take all of that complex financial data and boil it down into something you can understand at a glance. They're like a quick checkup for the company's health, letting you spot trends really easily. For instance, have a look at this chart of Welltower's business mix. In 1 second, you can see that more than half of their business comes from directly operating senior housing communities. The rest is split between what are called triple net leases and outpatient medical buildings. This tells you exactly where their focus is and, where their biggest opportunities and risks might be.
And here's another really powerful KPI. This one is called the interest coverage ratio. All it tells you is how easily a company can pay the interest on its debt. And here's the key. A higher number is better. So look at Welltower's trend. It is climbing quarter after quarter. That is a really strong signal of improving financial strength.
Okay, we've hit the big stuff. But just like with any important document, you always have to read the fine print. And the nice thing about the 10Q is that it's all standardized. You always know where to look. You want to quickly scan item 1 for any big lawsuits. Then really pay attention to item 1A, risk factors. This is where the company legally has to tell you everything that could go wrong. And finally, check item 4, where you'll find a signed certification from the CEO and CFO, personally vouching that everything in the report is accurate. And that's pretty much the anatomy of a 10Q. We've gone through the whole thing. So let's just wrap it all up into a simple, easy-to-use toolkit. Here it is, just 4 simple steps. My advice, don't start with the numbers. Start with the story in the MD&A, just to get your bearings. Then dive into those 3 big financial statements for the hard facts. After that, use the KPIs to spot the trends and check the company's health. And last but not least, always scan that fine print for any potential red flags.
So there you have it. The next time a company you're interested in releases its quarterly report, you don't have to just rely on the headlines. You can go right to the source. You now have the tools to open that 10Q and read the story for yourself. The only question is, what are you going to find?